Despite only investing about $25 a week into my Robinhood portfolio, the amount of growth that I've been able to have over the past 4.5 years or so has been really special. And I just really want videos like this and videos I made in the past and in the future to inspire you guys out there that feel like you, for some reason, don't have enough money to get started investing into the stock market to maybe see any returns. And just to show you that those returns, whether it's profits or passive income or both, will come in due time. Now, I know this year isn't quite over as of yet, we're almost there, but at this point, I want to show you guys what my overall profits have looked like with my entire portfolio, how much I've made in dividends over this year, compare that over the past couple of years, and also go over some of the stocks that were involved in this journey up until this point, and also talk about some of the dividend investing goals that I have for the years to come. So again, year's not over yet, but as of December 20th, my portfolio hit around $10,800 in overall profits, which is about $2,000 in annual profits or year-to-date profits for me, which if you compare it to, I guess, a benchmark like VTI, the percentage of growth is about the same. I think it's actually a little bit more for my portfolio than VTI, so that's always a plus. And I'm sure just a lot like you, with the random spikes I had in my portfolio are probably thanks to the decisions to not increase the interest rate by the Federal Reserve, which I know a lot of people really enjoy. But of course, I also had to make sure I was investing into the right thing so I could see the right positive impact. Now, besides the long-term profit that I want this portfolio to make over time, I also want to be able to enjoy the passive income and dividends. I can use that money to take my wife out to dinner, or maybe pay for a vacation, or at least be able to pay bills in the short term. And that's exactly why I focused all of my funds this year, or practically all of my funds, into dividend paying stocks and exchange traded funds. So with that being said, according to what trackyourdividends.com tells me I'm going to make in dividends by the end of this month, as of 2023, I would have made $258.72 for the entire year in passive income, which I know for a lot of you guys out there, that may not be a lot. You're probably seeing a lot of other YouTubers that make that every single month or maybe in a week, which is great, but I'm building there. I'm currently only investing $25 a week. I can't stress that enough, but what's really cool is comparing it to how I've done over the past couple of years, which, speaking of, this year I made 37% more in annual dividends than I did last year, which came out to be about $21.56 a month. Last year I made $189 for the year. The year prior in 2021, I made a little over $144, and my first full year of dividend investing only made $77. So regardless of the amount of money I'm able to invest, consistently investing it has shown me consistent increases in my passive income returns. And then another thing that's really cool is kind of looking over what my portfolio would look like in the future when it comes to passive income, assuming I stopped investing, period. I just completely stopped. And on top of that, that also assumes that the dividends that I did make, I just withdrew them out. I didn't reinvest it. I'm reinvesting nothing at all. Assuming I did that, and again, this is according to trackyourdividends.com, the numbers may be a little different because I'm recording this on a different day. Within 5 years, I'll have over $500 in annual dividends, which is really crazy, about $42 a month. 10 years later, I'm looking at over $740 a year, or about $61 a month. In 25 years from now, I would be looking at over $2,200 in annual dividends, which would put me at about $190, maybe almost $200 every single month. If that doesn't motivate you, I don't know what will. Now, my focus for this year with the specific positions that I decided to invest into indicated that I wanted to make sure that my long-term focus was just as important as my short-term focus. Yes, I want to make sure that I'm getting those monthly and quarterly dividends so I can make more in passive income every single year, but I also want to make sure that this portfolio can be passed down to my kids and their kids and so on and so forth, and start actually building some generational wealth, even some wealth that I can actually take advantage of myself. You can probably see that with the companies that I invested into, whether they were companies I've had before this year started or companies I invested into for the first time. And some of those companies are going to include Costco, Home Depot, and McDonald's. These are companies that I invested into for the first time this year, and they're popularly known as essential-based companies that are going to be a part of people's everyday lives. Some are a high necessity at times. But with them being essential-based companies, you can really see that from the overall growth that each company has over the past 5 years and just all time. And on top of that, I really do appreciate the fact fact that their dividend yield isn't super high. That's really beneficial because that means that's a lot of money that they can put back towards themselves, whether they reinvest towards their operations or just anything along the lines of what they do as a company. And that also ensures us as investors that we'll continue to see long-term profits, and that increases the opportunity of them not only continuously paying out those dividends every quarter, but actually increasing them. And there are other companies I invested into relatively similar, like Target. That's a company that I'm actually losing a little bit of profit on, but Target is Target. It's an essential-based company. I know they're going to be fine in the long term, and plus they pay a really nice dividend. But speaking of dividends, I also did make that just as important with investments like in Realty Income and in QYLD, which is a cover call ETF, just because of course I appreciate making those consistent monthly dividend checks. And it actually got to the point where I surprised myself when I saw what dividend paying stocks and ETFs paid me the most this year, of course, which was QYLD, because that's such a fairly cheap company considering what their dividend yield is and their dividend payout. And luckily, cross my fingers, it's been consistent for the past couple of years. But following that, I had Target, Realty Income, ADV, and Main Street Capital. A lot of high dividend yielding companies, and 3 of the 5 of those paid me every single month. So that just shows me how much I cherish that, especially being someone just like a lot of you guys out there that want to make passive income to pay your bills every single month. So why not have it pay you every single month? Even though I would definitely say that this has been a very successful year up to this point as far as my returns and my overall profits, I definitely know there's a lot I need to learn to become a better investor next year. If you've seen a lot of my videos over the past couple of months or so, I've said this a few times, where if I had to give someone some advice on just getting into investing for the first time when you really don't want to get into the research, which can be a little complicated, the rule was to invest in what you know. Now, I still believe that that's a very valuable rule, but I wouldn't want that rule to keep someone from actually doing the research. And I found myself occasionally making investments or continuing to invest in companies I already had just because I know that they're great. I want to focus more on statistics like the price to earnings ratio, the payout ratio, the amount of money that a company has on hand, cash on hand, versus the amount of debt that they owe. This may result in me finding companies that I initially thought weren't great investments and realizing that they are, whether it's the short term or the long term, and even seeing companies that I've been investing into for the short or the long term and realizing that they're probably not going to benefit me. Speaking of that short and long term, I said this before, I want to continue balancing my portfolio of stocks and ETFs that are for the short term with the passive income, and stocks and ETFs that are for the long term with their long-term capital gains. I think it's really beneficial for me to do it at this period of time because I have the advantage of being younger. I'm not worried about retirement and saving a lot of money. I can actually take a little bit more risk. When it comes to dividend investing, that risk is investing some of my money into companies or exchange traded funds that have a high dividend yield. But at the same time, I want to be able to take a lot of my money and put it towards companies that may not have the highest dividend yield, but they're known more for the overall long-term capital growth, like my investments in NVIDIA, which if I actually look at trackyourdividends.com, I would see that the majority of my money that I've made and the majority of the profits that I've made in this portfolio come from NVIDIA. On top of that, another goal I want to accomplish is to have enough money to where I'm comfortable enough to invest $50 a week rather than $25 a week, because whatever goals I see within the next 10 to 25 years by investing $25 a week will at least immediately be doubled over that same period of time. But of course, to accomplish that, I have to make sure that I do basic human things like pay off debt and find other sources of income so I can make more money all at the same time. But if you've been watching my videos, you would have caught that as of 2 weeks ago, I actually invested a whole extra $5. So now I'm investing $30 a week instead of $25 a week. And you would be really surprised how much $5 more a week can actually make over a portfolio when it comes to dividends and just comes to capital gains over a good period of time. But don't worry, I'll talk about it in this video, so make sure you check it out so you can see how crazy money I can make when it only comes to an extra $5 a week. I'm telling you, it's wild. But I appreciate you guys watching this video and being on this journey with me so far this year. And as always, take care.